Good afternoon. This is Tom Alexander. This is the weekend report for Sunday, June 25th. It is approximately 12:15 Eastern Time in beautiful Charleston, South Carolina. This is the weekly addendum to a written report that I send out every week. It is free. If you are not receiving that report and you would like to receive it, please send an email to tom@alexandertraining.com. Also, if you find value in this, please like it, please subscribe. Happy to answer any questions or comments. Okay. So we have a continuation of the same market that we have had since the end of October, and it has become increasingly bifurcated, I think is the word that everyone likes to use. Let's look at the charts. And as usual, we will start with the weekly charts. And I want to start with the Russell because, there are two schools of thought here. There seems to be a big debate. Are we in a bull market or are we in a bear market? Well, I think we're in a bull market in the NDX and the SPX. Not sure what's going on in the Dow. And I don't really, I have a hard time believing we're in a bull market in the Russell. The Russell has gone net nowhere since the top in 2022 and since the bottom. You can see the Russell closed on Friday. And this is a weekly chart, roughly at the 50% retracement level from the high formed back last August and the double bottom that formed in, I guess, last June and last October. And we're right in the middle of this. Now, there had been excitement on the part of many, including myself, when we broke out of this multi-month balance area a few weeks ago to the upside. That was a very positive event. And right now, we seem to be having a big fail there. And in the meantime, we do have the NDX with the exception of what is so far a little blip to the downside. The Russell just continues to do absolutely nothing. The Russell is 2,000 stocks. It is the index most representative of the overall economy, the overall health of the stock market. And I have a difficult time believing we're in a multi-year bull market unless and until the Russell begins to perform much better than it has. That's the bottom line. Now let's look at the NDX. If you look at the NDX, it's all good. We're in a bull market. We're going where no NDX has gone before and quickly, according to this chart. Now, I'm being somewhat facetious. If you look in the report that I sent out, if you look at the charts, I think the most likely path is some sort of balance. This upside, the upside that began at the end of April, end of April, is not sustainable. We've been up like 7 out of the past 8 weeks at a rate of change that is not going to continue. So we may go to new highs eventually this year, but I don't think you're going to see it in the next 8 weeks. And that's about, if we traded, well, just for fun, let's do this. This is the low from the last 8 weeks. Right here. This is the high. So if we traded the same distance in the next 8 weeks that we traded this 8 weeks, we'd be way up here. Now, could that happen? It could. We've all seen stranger things happen. But I don't think that's not the probability. It's also not typically how markets develop. This has been, even since going back as far as March, this has been an extraordinarily vertical move with very, very little weekly retracement. And we'll take it down in time frame and see the same thing on the daily chart. So we're due here in this time frame for more overlaps, a pause of a few weeks that includes maybe deeper retracement than any that we've seen since the the March high, since the January top. Okay, let's look at the SPX, and it is going to look very similar, though not quite as manic as the NDX. This is weekly chart of the SPX. You can see from the low to the high, we're up 27%, only about 8.4% to a new all-time high. But it also, for the past 4 or 5 weeks, has been almost vertical with the exception of last week. So you're expecting a more rotational market on a week-to-week basis here as well. Now we'll take a quick look at the Dow. And the Dow had this absolutely torrid rally off of last October's low, and it stopped in the middle of December, and we've been in this choppy, churny area since. The key reference areas are highlighted here. Okay, let's move over to the daily charts, and this is where we can fine-tune things a little bit. This is the upper key reference area we want to keep an eye on. This is the downside key reference area we want to keep an eye on. We could go straight back up into here in balance. We could go a little bit higher in balance. We could trade down in here. The paths of development, as I put in the report, are several at this juncture. This decline was overdue, frankly. Does this mean this is a top of Armageddon proportions? There's no way to know that. Based on momentum, you would say no. Okay, let's look at the index and S&P, SPX are going to be very similar, obviously, because you have the same primary drivers of both indices. You have a little bit of a blip from last week. Again, the paths here are numerous, but you are expecting a more two-sided trade than we have seen since this low back in late April. And you can see the balance area that formed in here with retracement. It doesn't have to be anything dramatic. This was not a deep retracement, but it was a chop fest and it took time. So that's what I would expect to see here. I would be a little bit surprised to see this area exceeded without some sort of pushback to the upside, if indeed we even get down into this area. But that said, even if we go higher, I don't think you're going to see the 5-6% ramps without any retracement for a while. And then if we go into the Dow, and this is a critical area in the Dow. It's been unable to be reached, to be breached now. 1, 2, 3, you can, however many times you want to count this, 4, 5, or 6, 5, 6, 7, 8. So this area, this upper area is critical in the Dow. And then, of course, our friend, Mr. Russell. This was the balance area that I referred to was a multi-month balance area. We broke initiatively to the upside, and it stopped and paused, as is normal in auction market development. But what happened that you don't want to see happen if there's a trend change in effect, and this marked the beginning of a new bull run. We're having an extremely deep, first of all, this balance area broke to the downside as opposed to the upside. And there seems to be increasing momentum to the downside now in the Russell off of the break of this level. Now, it's approaching the breakout point of the previous balance area, and this will be an important area to watch early next week. Okay, internals. All right. It has been 72 days since we had a negative 2,000 breadth reading. That is, one could say that's beginning to push the envelope, especially in a bear trend. And this is more evidence that actually the SPX, the NDX, have been in bull trends. So this is the type of thing you see in bull trends, not bear trends. Now, what is particularly interesting to me at this juncture is the 10-day moving average of NYSE advancing issues, which is the red line. And then the green line is the 5-day moving average of NYSE advancing issues. Both have rolled over, and both are, especially the 5-day, is approaching a downside extreme from where you typically form at least short-term lows. Now, to get to a real extreme, the 10-day has quite a long way to go. I will also point over here to breadth. And if you study this, if you study breadth going all the way back to March 31st, you can see there are far more clusters and consecutive days of negative breadth than there are consecutive days of positive breadth. So that speaks to the lack of breadth in the market. And it's a situation that everybody has been waiting to change, and it will change one way or the other. If we get a negative 2,000 breadth reading, it will be interesting to see where price is at that point in time. And if the SPX is trading into this 4258, 4300 area, we get this big negative down spike, negative 2,000 closing breadth. That would be an interesting level to take a look at. Guys, I hope you've enjoyed this. I hope you find value in it. Have a great trading week. I will speak to you next weekend.